You jibber jab, bamboozle, nuka noozle, bippity bop, she-call. You jibber jab, bamboozle, nuka noozle, bippity bop, she-call. I mean, you keep on talking, but you don't know where to turn it off.
Welcome to the weekend. I'm Jon Caldara, president of the Independence Institute. You're watching Independent Thinking. Tonight, a special treat. Three middle-aged white guys bitching about the economy. On my left from Citywide Bank, Tom Flanagan, who's also the president of the Colorado Association of Commerce and Industry, CASey, a very strong association here in Colorado. Thank you for joining us.
Glad to be here.
How's the banking business treating you?
It could be better. We're bumping along the bottom. I don't think things are getting much worse, but no real improvement. No real significant improvement yet.
All right, and for the even cheerier side, from the Independence Institute and an econ professor up at CU, Barry Poulson. Thanks for joining us.
Nobody has ever called an economist cheery.
No. Now you're in what's something called phased retirement.
Well, I'm teaching a couple courses each fall. That's what that means.
Yeah, I've been in phased retirement since I graduated from your fine institution, and it's been working out just fine for me. All right, let's talk about the economy, specifically here in Colorado. That I know that things are slow. We've got a better unemployment rate than the nation. We always keep saying that. It seems like that's the big thing. We've only had 7 point something when the rest of the nation is bordering 10%. But when you go to Grand Junction, you go to Pueblo, you're talking about rates that are well over double digits, and people are hurting. Now, it seems to me when I was a kid, I remember the terrible 80s, and it seemed as though while the rest of the country was recovering, we really lagged behind. And when the country fell down, we kind of lagged behind before that happened. Why is that? Are we out of step with the national economy as we used to be, or has that changed?
Actually, John, that may have been true in the 80s, but it's not true since the 90s. Over the last 2 decades, the Colorado economy has actually outperformed most states in terms of output and employment. We're an overachiever in economic growth. And so we have a very volatile economy with a high-tech industries fluctuating dramatically over the business cycle. But actually, we've outperformed most states in terms of output and employment.
Now, when I was cheating my way through your economic classes in the 80s, we didn't have a diverse economy here in Colorado. We had a lot of oil and gas, and we had agriculture, and that was really the big drivers, mining and some other things. That's changed?
Oh, absolutely. We have a much more diversified economy. It's still very volatile. We have a high-tech sector that's very volatile, but it's certainly an economy that has a much more stable growth path. And at least up until now, I think that you could argue that we've been pursuing policies, regulatory policies, fiscal policies conducive to high rates of economic growth. I'm not sure that's going to continue beyond this point, though.
All right, I want to get into those policies a little bit later. On the business side, so you're wearing a couple different hats. One, the CASey's hat, which is a political group. It's an association of businesses, but also I've gotten to know you because you're my banker. And by the way, Citywide Bank is just a terrific local bank that has. What amazes me about your bank is when I call you, there's actually people there, and not necessarily recording. So it's incredible that there's still an institution like that in Colorado. Are you okay? Do I need to pull my money out?
Well, you know, John, there has been a lot of concern about bank safety. And it started back in September of '08 when we had the Lehman collapse and we had the AIG. One after another, it was a cascading event. And there were rumblings and there were murmurings among customers about bank safety. We even had instances where customers came in and withdrew large sums of cash. And we said, well, where are you going with this?
Those are the drug dealers.
Well, no, these were usually retirees or someone who knew something about the 30s and the Depression. Fortunately, what I think happened was Poulson and the rest, Bernicki and others, upped the insurance levels at banks, deposit insurance.
Used to be $100,000, now it's $250,000.
It's $250,000, and it's unlimited until June 30th on other non-interest paying types of accounts. So that calmed that down, and we didn't see people coming in, taking money out, putting them in safe deposit boxes, or in a new safe that they'd purchased at Walmart. So that put an end to that. But in general, there still is, even today, some concern about safety. Bank performance has not been good. Bank closures by the FDIC have been running about 4 to 6 a week. So that's a pace of, up to 200 closures, and we had, I think, 140 last year. And Chairman Baer from the FDIC is predicting a similar number this year and additional closures in 2011. In addition, we're paying more for insurance premiums. Obviously, if you're closing these banks, the FDIC needs money. The banks are paying higher premiums to cover that, just as you would. If
which means I get less interest from
Exactly.
you. If I give you
True.
$1,000 to hold on to, I mean, right now I remember getting 6%. Then you get 6%.
Yeah.
What's the average rate of return on a passbook savings account right now?
Well, they're 1% and below. So you're talking about interest rates near zero. Short-term rates are near zero today.
Now, I would think, now, pardon me, you know this better than I do. If interest rates are low, we've got high unemployment, this would be a beautiful time for people to start investing in building new businesses, building new buildings. This is the time where I can get your money for cheap, I can get the employment for cheap. There are people who want to work for me, but I'm still sensing it's sluggish. And I know the White House keeps saying where things are turning. I saw the reports over the last week, and it says, well, it looks like there are more people being employed. We're seeing rumblings of a recovery. This is a slow recovery. Tell me, when am I going to see, give me the term, what is a recovery? And when's it going to come to Colorado?
Well, I think it's going to be a very slow recovery. It's going to take several years to get back to where we were before the recession. And as Tom said, there are some weaknesses in the Colorado economy that are going to slow things down. Obviously, we have lots of overcapacity in housing, commercial real estate. Those areas are going to be very slow to recover. And frankly, the banking industry itself is also a drag on the economy right now. We have not seen the expansion of credit that Obama has predicted. I think it's going to be a long time before banks are lending at the rates that they were.
Why?
Well, John,
Lend me the money.
Okay,
I need the money.
We deal with small businesses primarily. Those are our customers.
Right.
We have some medium-sized businesses like you, but also a vast number of small businesses. And they are not borrowing. Our loan portfolio today, or the loans outstanding we have in the bank, it's roughly about where they were 3 years ago. So you get a payoff, you make a new loan. But there's no net new growth. And when we talk to small businesses, they say the same thing: uncertainty. Uncertainty about taxes, costs, whether it be health insurance, new regulation. These are not conducive to hiring people. And also, ultimate demand for products is down. All the municipalities are whining about sales tax revenue being down. And the primary driver of sales tax is auto sales. So what's happened to auto sales in the last year and a half? Well, way down. So people are not spending, they're deleveraging. They're paying down debt, the ones who can. Now, obviously, if you're unemployed, you're not paying down debt. But we have businesses who are gripped with uncertainty right now and are not making investments in plant equipment or new jobs.
All right, so help me understand this. It seems like all the recipes there for recovery seem to be here when it comes to cheap money, cheap labor. We've got capacity on all sorts of things. It seems like it would be to get things rolling. You mentioned uncertainty. And it seems to me one of the big uncertainties for a lot of big businesses turned out to be healthcare. We didn't know what Washington was going to give us. Now we know that the worst happened, and what I thought could never happen has happened. But at least now we have some certainty. We still have uncertainty when it comes to cap and trade, when it comes to card check, when it comes to a lot of these issues. Give me a definition. When it comes to uncertainty, particularly locally, don't we have a lot of certainty?